FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's almost hump day. I've been saying it's hump day all day, but it isn't. It's Tuesday, August 20th, 2019. Well, hey, looking at our gold dashboard on Kitco. If you don't have that for your app, you should. I mean, as we're talking, gold is up $9.70 the ounce, right around to the 1505. Silver is $17.13 on the bid, up 29 cents. Platinum continues to muddle along. One day, platinum will be worth more than palladium again. Palladium's back up to close to 1,500. Well, probably most of you don't even know what rhodium is. It's kind of one of those rare metals. If you're into Mont Blanc pens, then you actually own some rhodium because they use it to harden the nib of your fountain pen. And anyways, that's up to it's getting up to record highs again, 3,700, but nobody even knows what rhodium is. We should talk about crude, 56.17 the barrel. Copper is below 260 again. Dow nominally off 27 points. The U.S. dollar index off 0.14 to 98.21. Hey, as always, if you got any questions, concerns, comments, feedback on the show, if there's guests that you want me to get on the show, we always do our best to get them. My producer Melissa works tirelessly to line up new guests constantly. Just email me, kl@kerrylutz.com. We got a new contest coming up shortly. Our good friend Mike Redlark just wrote me a couple of days ago. He got his 40 pre-1965 quarters. He's thrilled. Next time it's going to be an even bigger contest with a lot more prizes and a lot more ways to win. Anyway, someone who's been winning with these markets for decades now, our good friend Nick Santiago is with us in themoneystocks.com. Nick, man, price of gold, man, it's been sailing, but we were talking pre-call. It's due for a little pause in the action, huh?
Yeah, well, I mean, last time I was on, that was probably the most bullish I've been on gold since
Correct.
I've been on your program. And, we talked about it even before that it was breaking out and moving higher. But actually what gold just did was something pretty impressive. And I think it's worth your viewers finding out. So if you take the high price of gold, which spot gold hit $1,923, and that was in September of 2011. And then you just take the low price of gold, which was in December of 2015, and that was at roughly 10,454, I believe. Right, and if you just you just take a retrace of that move, you're going to see that what gold just did, it went up to a 50% retrace. So 1485 was a 50% retrace move from that high in 2011 to the low in 2015. And anytime you go into a 50% retrace, that's it's usually a good equilibrium point where things will pause and stop. But I will say this. Right now we're trading live on spot gold around $1,515 an ounce. Now you have until the end of August, which we have about, right now it's the 20th of August. So we're coming into the end of the month. August, as everybody knows, has 31 days. So basically, we got about 2 weeks left, about a little over a week and a half left to go. But if you close above a 50% retrace, the odds increase dramatically that you're going to go into the 618 retrace. And that's basically a 62% move from high to low. And that's all the way up at 1588. So I think traders and investors, you want to watch what gold is doing right now at the 1485 level. If it can hold above there by the end of the month and closes above there, it may pause. It may even stall out a little bit, which I expect. But ultimately, it's telling you it wants to go to that next retrace level, which is all the way around 1588. And if you round it up, then you got 1600 on the books. After that, it's really a straight shot to 1700.
There's no
then
resistance.
We start flirting with 18 and 19. So you're seeing the money coming into gold, and it's not just individuals. In fact, it's not at all.
No individuals.
It's not my next door neighbor buying gold. It's central banks that are buying it. You got People's Bank of China. They're accumulating gold right now, and a lot of people don't realize that.
Yep. This is true what you're saying. So Charles Nenner is saying gold 2,500, based on the cycles. So it's due for a little pullback. But you notice it's kind of run out of steam. It's kind of been in this range. And every time it gets down to 1,500 or close to it, like last night or yesterday, it was below 1,500. And then this morning in the after hours trading, it blew past 1,500. And I'm watching this and I'm saying, yep, 1,500 resistance point. Boy, it's really psychological resistance more than an actual resistance point.
That's right.
Yeah, because the real one's 1485. So we're looking 1485. It doesn't really look like it's showing any signs of wanting to really crash out. I had been expecting a $100 pullback earlier in this rally, but it never came. It only came out to like 50 or 60, and that was from an intraday high. So it doesn't really mean anything if it doesn't close at that high, it doesn't matter.
Right. And what you're seeing right now is anytime I've seen this pattern throughout history, and remember, the few shows back that we talked about, I talked about this monthly chart pattern on gold futures, how you had higher lows going in. You put a low in in 2015 in December. You had another higher low in December of 2016, a year later, and then you had a higher low in August of 2018. That actually was the last legitimate bottom. And that pattern, whenever I've seen that pattern, and I've talked about it with you, that's an explosion move waiting to happen. And we've seen it. And believe it or not, you have central banks around the world. I mean, these guys, Europe just came out the other day when the stock market had that big sell-off the very, very next day. So when you had the S&P 500 trading down 800 points,
right.
The Dow was down 800 points, the S&P was down around 28, 25. They came out the very next day and said, September, we're going to do a bigger stimulus than anybody expects.
Yeah.
Now, they didn't tell us what they're going to do, but these central banks are cratering at any sign of the markets going lower, because once confidence goes, then these markets can really tumble. So they are getting involved in gold, and China is really getting involved in gold, like we said. And again, that's why you see the dollar going up as well, right, with gold. I mean, money's going into the safest things that big money can find.
Hey, and the last time we spoke was June 24th, and you said $1,420 gold. That was the key resistance point. It blew through there.
Yeah,
Nick,
well, I said that was my target. That was my target at that time. Yeah,
and it blew through it like it was nothing,
like a hot knife through butter.
Yeah, just totally blew through it. It was remarkable to watch it happen. It
got to that level. It paused. It consolidated, and then it went even higher. And if the Federal Reserve this Friday, Jay Powell is going to be speaking at the Jackson Hole Symposium at 10 a.m. East Coast time. If he comes and signals that he's going to get aggressive the way Trump wants, Trump is looking for a full 100 basis point cut, 1 point cut in the Fed funds rate. If he even signals anything like that, do you know where gold will go? I mean, it could be realistically up at 1,600 in a heartbeat.
Yeah. Oh, I believe it. Yeah, it's pretty amazing to watch this thing. To watch it unfold, to see how the it's playing out like we always knew it was going to, but we never really expected it to, right?
Well, I've always told people you should own. In fact, I have a 10-ounce bar of silver on my desk that I keep here for good luck. I own silver and gold bullion. I've never, ever sold a single ounce of the stuff since 2003, and I would not sell a single ounce because it's your ultimate insurance policy. When this whole thing goes through its explosion phase, this whole market and all of this money printing, it is only a matter of time. The Federal Reserve has been around since 1913. We just hit 100-year cycle a few years back. And now you're starting to see more and more people, millennials, starting to say, hey, what is this Federal Reserve? You hear the president talking about the central banks, the Federal Reserve. People really never knew that there was a central bank that actually created money out of thin air before. They never really talked about that. Well, that's been going on, and we've been off the gold standard for so long now. I mean, officially off since Nixon. And gold has been somewhat tame. But now you're starting to see these central banks with their policies here. It really is just a fuel for gold and fuel for real money, because that's really, in my opinion, what gold is. It's real money.
Yeah. Well, I think we're going to find out very soon that it always has been real money, and it always will be. But we're going to have to go through a lot of pain and suffering before we learn the lessons of history here. This is thousands of years of history we're talking about.
Absolutely. And man does not learn from history. Human nature never changes. Therefore, the markets never change. Famous quote by legendary trader Jesse Livermore.
Oh, yeah.
And still to this day, with algorithms and every other thing that's out there, it has not changed.
Nope. It's often said the one thing we learned from history is that we don't learn from history, right? And it's so
I couldn't
true.
say it better myself. I think I read that from Will Rogers somewhere.
Yeah. Good old Will Rogers, man. He was like the funniest guy. If you ever have opportunity to just go and listen to some of his work, he was just amazing. He was really,
he's great.
Really amazing. I love the guy. And he had such wisdom. He really knew his stuff. So silver's even starting to move here. Nick, what do you think about that?
Yeah. So right now, I've been telling my members that silver futures, which by the way are trading right around 17.20, should get to around 18 and a quarter. Mm-hmm. That's when they get to around 18.25. That's going to be the sticking point there. But with that being said, if gold takes off, silver's not going to be far behind. So, keep an eye on it. But right now, my upside target for silver is around 18 and a quarter, which is right now, we're trading at 17.12. So it's basically another $1, little over $1 from here. But in due time, we talked about this last time I was on your program, you start breaking some serious pivot points, like the 2016 top, which occurred at 21.22. You close above that, silver's off to the races. Yeah,
I'm inclined to agree. Look, if gold finishes, one prediction we got from Kitco's Peter Hugg was that he was saying 1550 gold by the end of the year. Then I saw 1800 from someone else, and then 2500 from Charles Nenner. It could easily go over 2000 by the end of the year. We're not even in the strong seasonal part of the year for gold.
That's a fair assumption, but it's all going to be about that chart pattern. And I try to tell all of my members, I cover gold each and every night, and I say, hey, watch the pattern, let it tell you what to do. Once the pattern sets up, when the trend is up like this, people don't realize when the trend is up on the precious metals, they go somewhat like parabolic almost. So, right now we're still in that phase where we're just consolidating. You see a lot of chop. If you look at, whether it's gold or silver futures, you could just see how it's really just been going sideways. You can make a case ever since getting above 1,500. So I guess earlier in the month, around the 7th of August, we popped through there. And now we're just consolidating. When you consolidate, there's nothing wrong. That's healthy. It's like eating a meal and digesting the meal, and then you could go back and eat some more at the smorgasbord. But that's exactly what's happening. And you can see the consolidation phase that really happened in gold if you just go back to June and into July, late July. That was all just sideways consolidation. Then we soared right through 1,500.
Yeah, we soared. And it was interesting. So the catalyst for it, both times when gold really went up was when Trump laid down the tariff axe, right? That was what pushed it up. But it was going to go up anyway. That's what people have to understand. That just was a convenient reason where it really stoked the fear and pushed people. But that fear was going to rear its ugly head no matter what.
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
The chart pattern always precedes the news. So anytime you have that pattern, and, we were around 1420 for over a month's time in gold before it broke above 1500. But that pattern told you, that consolidation pattern told you, we got another leg to go. And then conveniently, the news comes out, and that's what, seems to be the so-called catalyst, why it happened. But the pattern was, like you said, it was already occurring. People just didn't realize it.
Yeah. Yeah, and that is something, the public is the last to know. Like the betrayed wife, the public is always the last to know. And in this case, what you were saying, like Andy Schectman, whose company, Miles Franklin, one of the top 3 bullion dealers in the country, the only one that is actually bonded and licensed, so you can't get ripped off going to them. And I know Andy personally, total integrity, but that's neither here nor there. They're not a sponsor. They're an affiliate of some site. He sends me like $3 a month or something, but not to say that. But he told me his business is up 50%, but the actual number of transactions that he's doing, Nick, is down. So what does that tell you?
Just goes back to what we talked about. It just goes back to the beginning of this conversation. The public has not gotten involved yet. And that's pretty much it. You're getting institutional buying here. And it's central banks that are buying it. And why would the central bank want to own gold? Mm-hmm. I think Ben Bernanke once told Ron Paul because it was tradition.
Yeah.
He actually said that. You can go back and check out in one of those Humphrey Hawkins testimonies. He actually told Ron Paul that buying gold by the central banks was tradition. I mean, if that's not the most...
That is so disingenuous. That's just a lie.
It really is. It really is.
This is an out-and-out lie. I mean, what is wrong with these people? I shouldn't be surprised, but, when you hear Boulder Dash like that, it just gets you. So we need to look at the dollar and the stock market and interest rates. So we talked about this, that that the stock market, the dollar, and gold could all go up together. But the stock market, has it hit a brick wall? Is it time to totally flee? Or
in my opinion, I have not liked the stock market since May. I was on your program saying sell in May, go away.
Right.
And we're going to be volatile all the way into the fall season. So I am still very, very cautious on the stock market. In fact, I caught that entire drop from the top in May 1st all the way down to June. Market proceeded to make a new high, I guess, on trade news, which is, ridiculous anyway. And then, we had that big drop all the way into August 5th. Then we had another big decline, as you know, the other day, which did a lot of technical damage on the S&P 500 during Options X. Now the market seems to have found a little equilibrium, but notice the move in the market right now is happening on such light volume. In fact, today it's only trading 21 million shares. It's absolutely ridiculous volume, no conviction. And I'm in the camp, we got more volatility and lower stock prices to go right now. I think there's a lot of headwinds in this market. And, institutional investors, institutional traders are not buying this market right now.
Yeah. We at the end of the bull market? What are you thinking?
No, I don't think we're at the end of the bull market because there's going to be so much intervention to get the market higher. I think right now we're at a phase where it's a bear phase and not a bear market. So you'll get these big sell-offs. But we're entering a time period where going forward, we're going to get a lot more volatility. And you'll see that stocks will fall a lot quicker than they have. Just think about this. Since 2009, have we even had 3 20% corrections?
No.
That lasted longer than a day?
No, definitely
We get
not.
to 20%, it miraculously just goes up the next day, right? I don't think we've ever seen, I think we've had 3. So just think about it. Who's propping that thing up as soon as it falls to the 20% off the highs? And, they're not, the powers that be are not letting this market down. So, we could call it manipulated. We call it whatever we want. I don't care. As long as I can trade it and make money off of it, it's better for me. So the reality of it is we'll see more of that. And they got a lot more ammunition. I know they say the Fed's out of bullets. That's, we saw Bernanke come up with QE1, QE2, Operation Twist, QE3. I mean, they're going to pull a rabbit out of the hat somewhere, and they're going to try to inflate this market. Just look at Japan. Japan owns, how many ETFs do they own? How many stocks do they own? I mean, the Bank of Japan, I mean, they own the whole stock market there.
Yeah, they basically bought everything.
Yeah, and look at Europe. It's no better.
Yeah.
Europe has bought every single
Switzerland.
bond you could possibly have. There's no bid in that bond market.
Hey, look at Switzerland, how they've basically bought, the central bank is buying shares. So what do they know? That means they're getting rid of reserves, which are dollars and whatever, the euros, whatever they've got there. And they're using that to buy shares and stocks. I mean, I thought the stock market was risky. Why is the central bank doing this?
Right. And where does the central bank get its money from?
Well, they print it, right?
That's it. They print it.
Out of thin air.
It's out of thin air. And the more they print, the higher gold goes, because it's really in my opinion, a lot of people disagree with me. I think when this whole thing cracks, and we could be 10, 15 years away, but it will happen in our lifetime.
Yes.
When this whole system goes, what are we going to go back to? Gold standard. Just like the Wizard of Oz said, it wasn't the yellow brick road. The ruby red slippers were really silver slippers. So it just goes to tell you, it's gold and silver that we're going to revert back to. And that's just the way the game is going to be.
Hey, and I'm a big believer in silver outperforming gold in this market, because the beauty of silver, we could talk about this till we're blue in the face, Nick, but let's face it, silver, industrial metal. Its industrial demand and uses have been going up, especially with electric cars and such, and burgeoning consumer electronics and military. Everything has silver. And the only thing that's been down over the past 8 years is investment demand. It's like 50% of what it was. It was a substantial portion. At one point, it was like close to half, I believe. Don't quote me on that. It's what I remember from reading way back when. And now it's like 12% or something like that. But it's going to go up, and just watch the U.S. Mint reports. Just watch them. They aren't the be-all and the end-all, but they really give you the sentiment, the leading sentiment indicator on silver. They're just not going to be able to hold it down. I mean, I don't know why JP Morgan is holding over 100 million ounces of silver. I don't quite get that. If it's on their own account for China or speculators, I don't know why they're holding it. But if they've got it, there's probably a reason why they're holding the physical. They're not holding shares in SLV
Right. They're not holding the paper stuff. They're holding the real deal.
Yeah. So what does that tell you? All these things. Well, it's so hard to find. My friend, webmaster Stefan, he bought Canadian 25-cent pieces, silver ones, because he's from Canada. They're really pretty, and I'm trying to get a hold of some. They're very difficult to find because, they got rid of silver right around the time the U.S. did, because they said, well, we're not keeping our currency silver because, we're not going to keep it in silver because the U.S. isn't. So ours will just get hoarded out and melted down. So they stopped. And, we're going to see interesting things there. finally, interest rates. Look what interest rates have done, Nick. I mean, it's breathtaking, the fall that they've taken.
Oh, well, do you remember when I was on, I guess it was, I don't remember when we did that, but I said,
June.
Not only are interest rates going to fall to 2%, might even go lower, but the Fed is going to start to lower rates. I mean, and it was, I think we did it in 2018. Here we are, or we're early 2019. Here we are. I mean, we're not talking about one rate cut. We're talking about potentially multiple, and many people are predicting going back to zero.
Yeah.
I mean, this is pretty incredible when you think about it. But, you know, they have to feed the stock market cheap money. They have to keep the liquidity in the system. So right now, I mean, we'll see what bond yields do here. I'm really looking for a test, though, now of the double bottom low on the 10-year U.S. Treasury note yield at 1.336%. Right now, yields are roughly about 1.55%. But and you see how they bounced bond yields when they pierced the 150 level. That's when we had that inversion between the two-year Treasury note yield and the 10-year Treasury note yield. But I have to think when you get this close to a double bottom, you're going to break it, and or at least temporarily pierce through it. So I have to think that bond yields are going down to that 2016 low, which was made at 1.336% in July of 2016.
And we're at 1.6 now, and we're a good deal because everybody else in the world is negative in any currency you'd invest in, and the U.S. is the only one that has positive rates now.
Well, that's why so much money is coming into the dollar. That's why the dollar. I mean, Kerry, when I was on your program in January 2018, I said I'm a dollar bull. I bought the U.S. dollar index. People were laughing at us, right? I mean, you even told me yourself. And then look at how the dollar's moved higher, because not that the dollar is the greatest thing in the world, but we're the best house on a bad block, and that money's got to flow into the dollar.
We're the Taj Mahal of Baltimore.
Well said.
Yeah, well, you know, we watch this thing together. I feel like we're partners in this, Nick. We've been watching for almost a decade now, and it's just playing out, finally playing out. And, you know, you can only continue the games for so long, and then reality is going to bite, and it's going to bite really hard.
And it has. It's starting, and you're starting to see these different underlying setups start to play out. And, you know, there's more to come. I mean, really, when you think about it, it's only August of 2019. Wait till we get into 2020 and the second half more so of 2020, where things really start to get interesting. Yeah. And both in the market, all the markets, it doesn't matter what market you trade, whether it's precious metals or the bond market, the stock market, the currency market. We're seeing some just absolutely amazing things that are going on right now, and it's just going to amplify as time goes on.
Oh, it really is. You know, this whole market, the Federal Reserve and all the brilliant centrally planned economy, you know what it reminds me of? There was a South Park episode where South Park, nobody can use their credit cards anymore, and he's got a margarita maker, and the kid, I can't remember his name, Stanley, takes it. He wants to get a refund, and he can't because it's been securitized. So he goes to Wall Street to get rid of the margarita maker because he wants them to buy it back. And he walks in, and the way they're making economic decisions is they've got a table with a bunch of different indicators on it, and then they cut the head off of a chicken. And chicken squirting blood all over the place, and wherever the chicken drops, that's what they do. And that's what our economic system has devolved into here, Nick.
It really has. I don't think that episode is that far off.
Oh my God. I'm like, hey, because I've been doing this a while, and I've been following the madness of these money makers. And I said, you know, that's really very close to life here. This is really similar to what it is. Oh my God, I can't believe it. They nailed it. And then he's able to get a platinum card with an unlimited credit limit. So he then is able to reliquify everybody else's credit cards because, you know, he fronts them money, advances or whatever. And then everything is booming in South Park again. I mean,
he saved the town.
Yeah, it's exactly like the Federal Reserve, right? Oh, sorry, your credit card isn't working. We'll just add another 0 to your credit limit. Just go and spend. Don't worry about saving. You don't need to save. The government will take care of you. Well, we're in a pickle, that's for sure. We got to run. We're out of time. InTheMoneyStocks.com. Go there. Free trial involved. It's always great to have you on, Nick. Hey, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook pages, Financial Survival Network. Sign up for the newsletter. Just sent one out yesterday. I'll try to send out another one on the weekend. Nick, thanks for coming on. Always a pleasure.
Great to be here, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.